Good morning and welcome to today's session on how to access funding for your business. And I'm your host, Khomo Mokhobo, mentor and consultant with Startwise. First, a little bit about me. I'm a BCom accounting graduate with a postgraduate in development finance, and I've done various other corporate finance and fund management certificates from various universities. I've had well over 25 years of working experience, 15 of which were at the executive level. And I've been in the consulting business for over 10 years in both the corporate and the public sector. That's it about me, but I think let's get into the real reason that we're here today. And the first thing that we need to understand is we need to look at why do SMEs have a high failure rate. And this is based on a study that was commissioned by UWC about 2 years ago, but the results are still valid even today. And top of the list is lack of proper planning, which is followed by poor cash flow management, access to funding, late payment by government and large corporates, issues around lack of systems and processes, enabling the business to be able to handle growth. There's an issue around separating personal and business accounts, which is also a cause for concern. And also the issue around being a one-person show, that is the entrepreneur trying to do everything in the business from marketing to accounting to stock management, et cetera, et cetera. It just can't work. But the key one for today is lack of proper planning, which is what we are focusing on. And the other thing that we need to also look at is what do funders look for? And it's very important that the information that we're looking at today, we look at it from a general perspective. Certain funders will emphasize different areas, but across the board, this is what funders generally look for, when they look to fund a business. They're interested in where the business is located, what type of industry it's operating in, and the stage of business, because there are different dynamics involved depending on the economy, et cetera, et cetera. Stage of business is very important. Some funders, will do startups. Some funders will not do startups. Some funders will look at mature businesses while others will look at mid-stage. So, yeah. The other thing that they look for is does this business that is looking for funding fit their portfolio? However they define their portfolio, it could be by size of business, it could be by niche market, i.e. technology versus manufacturing, etc. An important aspect they also look for is for existing businesses, they want to see past financial performance. So it's very important that you know your numbers well and are able to present them in a concise manner such that they're understandable. They're also looking for an effective business model. This is essentially how your business makes money. And this is important also most especially for startups, in that how are you projecting your business going forward and its profitability and cash flows. They look at the market characteristics of the business as well, and whether the market that you're operating in has growth opportunities, very important. From a historical perspective, when they look at historical numbers, they want to see that this business has been growing rather than being static. The other thing that we also need to consider is that funders and investors are inundated with funding proposals on a daily basis, weekly basis, whatever. And so they've seen a lot of ideas before, and most probably they've seen something similar to yours. So you've got to show what makes yours different from everybody else. They also look to see, does your business have a competitive edge? Everybody has competition out there. And the issue is not so much that you are just in it to compete, but you're in it to compete to win. The other thing that they also look for is what we call social proof. This can be anything from an off-take agreement, which is quite popular, through to some businesses also going to market surveys and try and test, the acceptability of their product or service. And that kind of data is what we refer to as social proof. And then they look at the promoter of the business or the entrepreneur themselves and ask, now, what is the background and experience of the key person or people in that industry in which you want to operate? And they'll also sometimes look for traction. What have you done before that sort of adds to giving you the edge in terms of what you're promoting? So in general, that's what funders look for. And like I said previously, that some will emphasize certain areas and others other areas. But across the board, this is a snapshot from a general perspective. Now we get into the business of the day proper. How to prepare your business for funding. And this is before we even get into building a business plan. The first thing, most importantly, is do the research. And it doesn't matter whether you're starting out or you're expanding your business, or you're looking to get into new markets, do new products or new services, you need to do the research. That's the first step. You need to know everything about the product or service that you're going to be offering, how it's made up, what its characteristics are, etc. Part of your research is, who are you going to be selling to? You need to know the types of people or businesses that are going to be taking up your product. What's their earning power? How do they behave, etc.? What we call the buyer persona. For individuals, we look at things like LSM levels, etc., because that shows affordability level. Again, you need to go deep into knowing your market. Again, very important is know your competitors. Research your competitors. Who are you going to be competing against? What are they doing right and what are they doing wrong? Because you want to leverage of what they're doing wrong, and maybe to some extent also duplicate what they're doing right. And this is all types of competitors, including those that can substitute your product. Also, as part of your research, you need to really look into what are the most profitable sales and marketing channels, because that's your route to market. And that's where you're going to make the money. And also during the research phase, you need to start thinking about your team or structure that is going to take this business to market and make a profitable business. Having done your research, now is the time to sit down and put pen to paper, or rather type on your laptop, and build the business plan. Now, the issues that I'm concentrating on here are what I call the key issues. There are a whole lot of other issues, obviously, or sections that go into a full-blown business plan, but this sort of covers the key issues that one needs to hit and be and emphasize that will differentiate you and give you a stronger business plan. And one of the first things is really clarity of vision and mission. Where are you as an entrepreneur taking this business to? What is your vision looking into the future? What are the key milestones that you've set yourself that you'll achieve over a period of time? And you put those milestones into like 6 months, 12 months, 18 months, 24 months, whatever makes sense to you. But there's got to be clarity around what you're going to be achieving over a period of time, so that the investor is also clear. And this is where you show your passion for what you're doing. Very important. Having done your research around your market and knowing your audience and who they are, you then have to, within your business plan, clearly define, what's your target within that market? What size are you targeting? What are the growth prospects and over what period, and what's the market share? And also importantly is how you're going to achieve that market share. How are you going to achieve that growth within your target market? Your competitor analysis here as well is, now how are you going to differentiate yourself from your competitors and do things differently, better, etc. First, in terms of customer satisfaction. Remember that the underlying theme here is you are trying to solve a problem that you've identified in the market, and that you believe that your competitors are not doing well and that you can do it better. And that leads to your unique value proposition. What is it that differentiates you from everybody else in terms of what you're bringing to the table? That then assists in you being able to build an effective business model. And as I said previously, a business model is purely how are you going to make money? How are you going to sell and generate revenue? And you start to look at your pricing strategies here, your pricing models, etc., and you build around that. Very important for potential funders and investors is having a deep risk analysis. Every business faces risks, no matter how big or small. And if you show that you've done your risk analysis well, and you've got the mitigating actions that you're going to take in order to reduce the risk, you're reducing not just the risk of the business, but you're reducing the risk of the investors' funds being lost. That must be underpinned. All of this must be underpinned by, a very robust financial analysis. And when you put together those financial projections in terms of income statement, balance sheets, and cash flows, you've got to be able to model it in such a way that you can do scenario planning and change for any assumptions that you have, and be able to play with it and show different profitability and cash flow levels depending on how certain assumptions change over time, because nothing will be constant. And one of the key areas here is your cash flow. Your cash flow projections have got to be done in such a way that you're able to show positive cash flows within a reasonable amount of time. And a reasonable amount of time will depend on the type of business, because that is what is going to repay the investor, whether you're taking out debt or it's an investor who's put in equity and is expecting dividends. And everything comes out of cash. Cash is king. So the cash flow becomes the basis. And I also want to add here that for existing businesses, that the cash flow is also used for evaluation of the business and what it's worth. Another area that you need to emphasize within the business plan is what form of impact is your business going to make in the community that you operate in the area that you operate in. Is it sustainable? Because businesses that do not make an impact are not sustainable. And impact can be anything from creation of employment to development of infrastructure, etc. Whatever it is that you're going to really leave behind as a legacy of sorts, you need to emphasize that, because if funders are looking for impact rather than just pure profitability, it's part of their ROI calculations now. There's been developments around, funders are interested in how is the money going to be looked after, and that talks to the structure and governance of the organization. And the bigger you are, the more important this becomes. So you need to make sure that the way you're structured and governed as a business is in such a way as to reduce the risk to the funds that are being invested in your business. And lastly, but also equally important, your personal investment. Whatever it is that you have spent in terms of time and money in getting the business to where it is, be it a startup or an early stage or whatever, you need to put that there to show that you have also got that personal commitment that you have been prepared to put in. And that convinces potential funders and investors that if you're prepared to stake some of your own time and money on it, then they should be able to too. So that, in a nutshell, is some of the key areas that you need to really emphasize in terms of structuring a strong and convincing business plan that has a higher chance of being funded. Once you've built your business plan, the next step is to, again, do some research around the funding options, not just so that you don't just go out there into the market and hope to get. And the funders are, with the internet, there are various websites with different types of funders. And they tend to differ. You get your niche who target a specific, for example, you've got those who only go for technology, those will only go for manufacturing, or whatever, versus the generalists. And your generalist funders are, typically your state-owned funding institutions, which by their very nature have to be broader. And then you've got others somewhere in between the niche and the generalist. Funding options will differ between debt, equity, or both. Your options will be the fund size. And this is important because depending on how much you have determined you need in your business plan as a result of your business plan, you want to go and target funding options which match the amount that you want. It's pointless going for, if you need 5 million and you go and talk to somebody who starts at 50 million, for example, etc. Again, also as you do the research, you will see the funder criteria, and you need to then compare those criteria with what you've got and what you are, what your business looks like. And very important, look for the type of financing that suits your requirements. If you're in the market for asset-based financing, that's where you're going to concentrate on. The whole objective of researching your funding options is to narrow down your options so that when you target the funder, you're talking the language that they understand and want to hear. Very important. Narrow down your options. You don't want to have an auction of your business plan because it might be a big market, but it's a small market, and sooner or later everybody gets to know. Let's look at the types of financing. You have your debt, you have your equity, then your hybrid, which is really debt equity, then you have grant funding, and then you have specialist types of funding such as asset financing, invoice discounting, debtors book discounting, etc. So when you look at what you require for your business, and this is part of the business planning phase, you will start to identify what kind of funding do I need? And also very importantly, what kind of funding can my business sustain? And part of that business planning process when you're doing your financial analysis is that you actually test and see and actually model different types of funding scenarios, put in debt and see what it does, put in equity and see what it does to your free cash flows. Because you want to be able, after having repaid all the investors, have money for yourself as the owner. Otherwise, why are you in business? And then you've got the different sources of finance, your banks, your government agencies, your development finance institutions, cooperatives, venture capitalists and private equity, angel investors, etc., etc. Who again, in terms of the other information that we looked at previously, will have different areas that they look at in terms of what is acceptable to them to finance and under what circumstances. Just some additional tips, and this is really around the investor pitch, because this is an important document. The investor pitch is really a very compressed, succinct document that creates the interest of the funder or investor. Rather than inundate them with this big document called the business plan, you are hitting them with the highlights of what your business proposition is about. And you've got to be bold and brave here. Just tell your story and don't be shy about what we call blowing your own horn. I've even seen some investor pitches which are done in short video format, so anything is possible. And the things that you need to include in there is, again, let's get back to that impact issue. Sustainability and impact are no longer buzzwords. When the ROI calculation of old, which just used to look at profitability, has gone out the window. It has been expanded to say what are the financial and non-financial impacts and returns that this business will really bring about. In your investor pitch, you must have high focus, and you must focus on what makes your business unique or your product unique. What is it that you're bringing to the market that's unique? You must focus on the solution or solutions that you're providing. That's it. It's a solution that you're providing to the market, to the buyers out there, etc. Focus on your success indicators in your investor pitch. These are the areas which will show that I'm doing well, and that's how I'm going to hit them. And lastly, and mostly, just stand out, show the picture, big picture, and be fast. Remember, this, timelines are very narrow lately, and investors are looking at a lot of proposals. So yours has got to be impactful, big picture, and it must be quick and make impact. Yeah. And that concludes our session for today. Should you be needing any assistance with your business plan, funding, etc., please feel free to contact me on Startwise. Thank you.